Hello everyone. I hope you all are safe and sound. In this video, I am going to teach you practical problem on acquisition of business. For practice, I have referred the standard books. So let's get started. A company was formed with an authorized capital of rupees 5 lakhs. What is the meaning of authorized capital? Authorized, nominal or registered capital is the maximum amount of capital for which shares can be issued by the company. Divided into 25,000 equity shares of rupees 10 each and 2,500 6% preference shares of rupees 100 each. To purchase the going concern of X. The company is going to purchase the concern X, whose balance sheet stood as follows. The balance sheet of the concern X is given to you. The purchase price was agreed at rupees 1,75,000. Purchase price is the amount which is paid by the company to the vendor firm for purchase of the business. Payable as to rupees 50,000 in fully paid equity shares, rupees 50,000 in fully paid preference shares, rupees 30,000 in debentures redeemable in 10 years and the balance in cash. So the total purchase consideration is 1,75,000. This is paid in the form of equity shares, preference shares, redeemable debentures and balance in cash. This is the capital amount being given to you. So how can you find out how many number of shares been issued by the purchasing company? If you want to know how many shares, then this is the formula through which you can calculate. Share capital amount divided by value per share. The capital amount is rupees 50,000 for equity shares divided by the face value of equity shares. 10. 50,000 divided by 10 is equals to 5,000 equity shares. Similarly, calculate for preference shares. What is the value being given to you of preference shares? 50,000. You will get 500 preference shares. And if you want to know the capital value, how can you find out that? Number of shares multiplied by value per share. With the exception of rupees 3 per share on 600 equity shares. Exception means except these shares. This represents your calls in arrears. So except these shares, the company have received the amount on all the shares. Calls in arrears means the unpaid amount, which were subsequently forfeited. Forfeited means cancellation of the shares is called as the forfeiture of shares. When the company collects the share capital amount in installments and if the shareholder fails to pay any of the remaining amount, then the company forfeit or cancel the shares of such shareholder and reissued at a discount of 20%. The forfeited share are being reissued. Usually these shares are being reissued at a discount because it is like a second hand shares. Discount of 20%. So when they give you in the form of percentage, this percentage you have to calculate on the face value. Which shares are being forfeited? Equity shares. So you have to calculate on the face value of the equity shares. What is the face value of each equity share? 10. So 10 into 20%. You will get rupees 2. The balance on forfeited shares account is utilized in writing off goodwill. If any of the balance is left out in shares forfeited account, has to be utilized in writing off goodwill. Give journal entries to record these transactions in the books of the company. Preparation of the working notes will help you in posting the amounts. The first working note is for the discharge of purchase consideration. Discharge means how the company is going to pay the purchase consideration. It is paid in the form of 5,000 equity shares of rupees 10 each, 50,000. 500 preference shares of rupees 100 each, 50,000. Redeemable debentures as 30,000 and the balance in cash. How much is the total purchase consideration? 1,75,000. From this 1,75,000 you subtract these modes. And the remaining balance will be paid, that is 45,000 in the form of cash. The next working note is issue of share capital to the public. As you know that there are two categories of the shares. So first we will write for preference shares. The remaining shares after issuing to the vendor were issued to the public. How many total preference shares you had? 2,500. From this 2,500 you subtract how many you have issued to the vendor? 500. So you will get 2,000 preference shares. And what is the face value of each preference shares? 100 each. 2 lakhs. Similarly, we are going to issue the equity share capital. How many total equity shares you had? 25,000. From this 25,000, subtract how many you have issued to the vendor firm? 5,000. So you will get 20,000 equity shares of rupees 10 each. As we are having some calls in arrears in the equity shares. So there is a choice with you over here. Either you can write 10 at a time, then later on you can subtract the calls in arrears, or else separately you can write for 7 and after that you can write for final call. As this method is going to be easy for you, so I am going to do it separately so that there is no confusion. 20,000 equity shares into rupees 7 each. You will get 1,40,000 for the final call. 20,000 equity shares of rupees 3 each. How much the company was collecting on the final call? Rupees 3. So 20,000 into 3, 60,000. And the unpaid amount is on how many shares out of 20,000? It is on only 600 equity shares of rupees 3 each, 1,800. On final call, actually the company have to collect 60,000, but a shareholder did not pay the final call amount on 600 equity shares. Now the company is going to receive only 58,200 rupees. The next working notes is for forfeiture of shares. How many shares the company have forfeited? The company have forfeited 600 shares. Why did they forfeit this or cancel these shares? Because shareholder did not pay on 600 equity shares. 600 equity shares. Which shares the company have cancelled? Equity shares. And what is the face value of each equity share? 10 each. So 6,000. Out of 10, if 3 is not been paid, which means how much is been paid? 7. 6,000 equity shares into rupees 7 each, you will get 4,200. This amount the company is not going to return to the shareholder. The company will charge it as a penalty and they will transfer it to an account called as the shares forfeited account. And when the shares are issued at a discount, the discount amount the company is going to utilize from this account. How much is the unpaid amount? 1,800. This is given to you in the question. Whatever the shares the company have forfeited, they have reissued it. 600 equity shares, what was the face value of rupees 10 each, were reissued at a discount of 20%. So 20% calculate on the face value, you will get rupees 2. So 600 equity shares at rupees 8 each. 10 minus 2, you will get 8. So how much the company is going to receive when they have reissued these shares forfeited? 4,800. And how much is the discount that the company have given? They have given a discount of 2 rupees each. 600 equity shares of rupees 2 each. 1,200 is the discount which the company is going to utilize from this share forfeited account. Whatever the balance is left out in the share forfeited account is utilized for writing off the goodwill. So how much is the balance you had? 4,200. From that, how much you have utilized? 1,200. Which means how much is remaining? 3,000. This amount has to be utilized for writing off the goodwill. As in the question being given to you that you have to write the journal entries in the books of the company. So now we will be writing the journal entries. The first journal entries in the books of the company is for the purchase consideration due. What is the entry? Business purchase debit to X. Now who is X? X is the vendor. Now how much is the purchase consideration due? The total purchase consideration which the company has to pay is 1,75,000. The next entry is for taking over assets and the liabilities. In the question, it is not been mentioned any specific asset and the liabilities. So you have to assume that the company is going to take over all assets and the liabilities. In the liabilities, you don't have to take the capital and if any of the reserve is been given to you. And the realizable value is also not been given. So you have to assume these are being taken up at the book value. When the company is taking over the assets, the asset value is going to increase. So asset shows debit balance. Whenever its value increases, we have to debit it. So debit all the assets. That is your cash, book debts, stock in trade, machinery and buildings. The next we have to write for the liabilities taken over. when the company is taking over the liabilities, its liabilities are going to increase. Liability shows credit balance. So whenever the liabilities increases, we have to credit it. What are the liabilities that we had? Bills payable and the creditors. When the company is going to take over the assets and liabilities, for that the company will pay the purchase consideration. After this, you have to find out the difference. Is there any differences there or not? Compare the debit with the credit. If you get the difference on the debit side, it is going to be a goodwill. And if you get the difference on the credit side, it is going to be a capital reserve. So find out. You are going to get the difference on the debit side as 42,900. The third entry is for the payment of purchase consideration. To whom the company is going to pay the purchase consideration? To the vendor X. Debit the receiver. How much he is going to receive? The total 1,75,000. In what form he is receiving? In the form of equity share capital, preference share capital, redeemable debentures, and the balance in cash. The fourth entry is for the receipt of share capital amount. Whatever the shares the company have issued to the public, from that the company is going to receive the cash. Why the company will not receive from those shares which are being issued to the vendor? Because when the company have taken over the business, for that they have to pay the purchase consideration. So they are paying in the form of the capital. So for that the company will not charge anything from the vendor. As the company is going to receive the amount, so we are going to debit the bank. Debit what comes in. The company is issuing the share capital. Its value is going to increase. The capital shows the credit balance. Whenever its value increases, we have to credit it. You can refer over here in the working notes. How much they have collected from the preference shares? 2 lakhs. And how much from equity shares? 1,40,000. This final call will be writing separately. First, we'll be writing for the due amount, that how much we have to collect on the final call. 20,000 equity shares into rupees 3 each. So you have to collect 60,000 on the final call. Then we'll see how much we have collected. Actually, the total we had to collect 60,000. From that, the shareholder did not pay 1,800, which means how much we have collected? Only 58,200. What is the journal entry for forfeiture of shares? Forfeiture means cancellation of the shares. When the company issues the shares, its share value is going to increase. The capital value will increase. At that time we are going to credit it, but in this case the company is going to cancel the share, so the share capital value is going to get reduced. So when it reduces, what we have to do, we have to show the opposite balance. The capital amount, we are going to debit it. This is the total value of the shares forfeited. From this, how much the shareholders have paid? The shareholders have paid 4,200. And how much was the unpaid amount is your 1,800. That unpaid amount is on the final call. Whatever the shares being forfeited by the company, these are being reissued. Reissued means now the company is going to receive the amount. How many shares they have reissued? 600. These are being reissued at rupees 8 each. So 600 into 8. How much is the discount that we have given? We have given a discount of rupees 2 each. 600 into rupees 2 each. What was its total value? 6,000. As the company have reissued, again their share capital value is going to increase. So we have to credit it. And this amount we are going to utilize it. So out of total, this balance is going to get reduced. So we have to debit it. The last entry is for writing off goodwill. The goodwill has to be written off from which account? This is mentioned to you in the question. From share forfeited account. So goodwill is an asset. Writing off means its value is going to get reduced. So asset shows which balance? Debit balance. When its value gets reduced, we have to show which balance? Credit balance. From which account you are going to utilize the amount? From the share forfeited account. This is how we have to do the treatment in the books of the purchasing company. I hope that you all have understood this problem. Thank you.